other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. Beneficiary planning and asset protection go together like peanut butter and jelly, but leaving everything to your kids can be problematic. Call Cushing & Dolan at 866-848-5699 and get their new guide called How to Leave Assets to Your Beneficiaries. Don't leave your future or your children's future to chance. Call 866-848-5699 or request it online from our website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends, plus breaking business news every day. This is the Financial Exchange with Chuck Zodda and Mike Armstrong.
Well, after a week of day-to-day volatility, but ultimately continuing the theme of the last month, which is you're not going anywhere. We've got a quiet day here, which would be the appropriate way to finish out April, given that at this very moment in time, the S&P 500 is currently trading at 41.43, and it opened the month at 41.24.
And it hasn't even been all that volatile to get here.
So
the last week was the most volatility I'd imagine you've seen in this month.
Things just have not. I'm sorry, it closed the month. It closed the first day of trading at 41.24.
Okay.
So yeah, you've had this range that we've been in, and yeah, on Tuesday it was the market sold off 1.5%. The next day, it sold off another 0.5%. Then yesterday, hey, it just made 2%. We're flat for the week.
Yeah.
So it's an appropriate way to close out the month because it's been a very calm market overall. Now, next week is going to get busy. Okay?
Yeah.
Next week, we've got ISM Manufacturing, ISM Services, Fed, JOLTS, Jobs Report, all in 5 days.
In addition to how many earnings? 100?
Yeah.
Apple's on Thursday.
Yeah, we've got another 24% of the S&P 500 reporting by market cap. A big chunk of that, obviously, is clustered within Apple, who reports next week. But when you look at some of the other big names that are going to be reporting next week, there's no shortage of them that are going to be coming out then. You've got Pfizer, AMD, Starbucks, Uber, Ford. That's on Tuesday.
And by the way, I mean, we are already, I think, 250 companies into earnings season right now. So we have a good sample at this stage. And as to why people might be scratching their head here, but the earnings data, while indicating slowdowns and cost cutting, is beating expectations. They're revised downward expectations, but it's beating expectations by about 80%.
It's been a good week for earnings.
Not by about 80%. About 80% of the companies reporting are beating expectations.
I didn't want to say anything because I correct you too often, I feel, and I'm trying to be more understanding as I age.
Understanding of my nonsense. Got it.
So Wednesday, you've got Qualcomm, CVS, Public Storage, Kraft Heinz, MetLife, Phillips 66, Yum Brands. Thursday, Apple, ConocoPhillips, Monster Beverage, Moderna, PG&E. Do we really care about AIG at this point?
Not really.
Not really.
Yeah, no.
Block, the company formerly known
Don't really
as
care about
Square.
them either.
I know, but I just like saying that because, it's kind of a joke. So that's what we have happening next week. This week, today, we got PCE, Personal Consumption Expenditure Price data, that came in pretty much in line with expectations, 0.3% for the month. On the core, on the headline, it came in at 0.1% for the month. That headline driven down by the fact that in March, oil prices had gone down. That'll subsequently reverse for the month of April. But the thing that's notable, core PCE is pretty much just hanging out. If you look at the 3-month average, which I think is useful, it's pretty much hanging out in the mid-4s.
Yeah.
Which is not awful, but it's hotter than you'd like to see it.
So we talk about this PCE inflation report, I don't think because it ever surprises us, because it comes out, 3 weeks after CPI?
It's the last week of the month, every month.
And so we pretty much know what we're going to see in this report every month because we've already received another government data report on what inflation is printing. But this is the preferred measure of inflation by the Federal Reserve.
Trademarked.
It looks a little bit, looks at things slightly differently than CPI does. But by and large, you know what you're getting. And this repeated a lot of the same information we saw from the headline CPI numbers, which were largely taken as good news because you didn't see any upswings in inflation. I think total CPI was flat month over month or up 0.1 month over month.
Give me just a second to pull it up, and I'll let you know.
It was,
month over month, headline CPI was up 0.05.
Yeah. So the same as PC, 0.1% month over month headline, but showing the same thing, which is core prices are stubborn. Easy to get them down from 10%, not so easy to get them down below 4.5%.
Yeah, core PCE has been above this level since October of 21. So we're going on a year and a half now, and core PCE has not been below 4.6.
And I think the key item that has not budged at all in that space is shelter costs.
It's like the Rolling Stones once said, "Give me shelter."
They sure did. Or
I'm just giving you. I just
or
wanted
like
to
that
let
guy.
that sit.
Or like the guy from New York said, the rent is too damn high. In either case, that seems to be continuing to play out in inflation. And in spite of private sector data reporting rent falling across many different areas,
No.
they reported it previously. It started to swing back up. We have not seen any of that flow into CPI or PCE to this point.
And I do think that on the housing side of things, here's one of the things people have been banking on is, okay, housing costs are going to have to go down, and that'll provide a nice tailwind for what we see in inflation data. When we look at what's going on the rental side and on the purchase side, there's been an inflection in the last couple months that suggests, hey, those costs may not provide the tailwind you think they will over the course of this year.
Yep.
I'm not saying that that's guaranteed or anything, but we've seen rental prices moving back up the last couple months, suggesting the falls that we saw in the end of last year were just some exaggerated seasonality. And on the housing side, we just got Case-Shiller and FHFA home price data coming out in the last week that both of them show that home prices actually went up in the month of February.
Yep.
So the jury is out on whether housing can become the tailwind to lower inflation readings that people think it will. And I also, put out there the fact that we haven't visited the Manheim Used Vehicle Value Index in a while.
Not recently, yeah.
It's been, I don't know why we don't discuss it more often.
We should talk about it every day.
Because it should be something that we discuss on a daily basis, in my opinion. And what is interesting on this is, remember the last few months where we did have used vehicle prices starting to rise again? Ever since, I think, November, they started ticking back up.
Sounds about right.
The April numbers, big drop, okay, on that side. Now remember, this is wholesale versus retail, okay? But you saw about, through the mid-April numbers that Manheim has, about a 3% drop in used vehicle prices then, which suggests, hey, if you are a used car dealer, you no longer are buying cars at the... It doesn't suggest it. It tells you that. The question is why. There's been a lot of chatter about, in the post-Silicon Valley Bank blow-up era, which is now 6 weeks old, that one of the areas that a lot of lenders are curtailing their lending is in what are called floor plan loans to used car dealers.
What's a floor plan loan? Oh, stock
Your
up
inventory.
Yeah.
Okay. It's inventory lending to used car dealers has been cut off pretty significantly.
That's interesting.
So the caveat there is, okay, the wholesale price may be dropping because used car dealers aren't buying as many used vehicles. But if they're not buying as many and demand on the retail side is higher, you might actually see the flow-through price move up because there are fewer used cars out there. It's kind of a funky thing, but I just thought that was kind of notable because we hadn't looked at it in a while.
Well, with all of the exciting things that we have to talk about today, and maybe I just didn't have enough breakfast, I have to tell you that the two stories I'm most excited to cover today have to do with eggs and butter. So that's a little bit of tease for everybody later on this show. We've got big news about eggs and butter coming up later on the show. Completely different stories, but
I got my daughter eating butter now.
Cover. Your dog?
My daughter.
It sounded like you said dog.
I got my daughter eating butter now.
Just like
straight up.
Okay.
Oh, she's doing the weird thing you do with just like grabbing it and eating it. Yeah.
Yep. Apple meat tree.
Yeah. No kidding.
Yeah.
Well, let's take a quick break here, and when we come back, do you want to talk a little bit about food prices?
Yeah, let's talk food prices when we return.
Wall Street's volatility continues as the threat of a recession lingers. Breaking business news all morning long, only here on the Financial Exchange Radio Network. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Financial planning never sleeps, so as spring comes into full swing, now's a great time to spring clean your finances. The new guide from the Armstrong Advisory Group may help you do just that. This is Mike Armstrong, and our guide talks about planning for a one-time expense this year, like a new car or a long family vacation, and how that might affect your finances. We'll also look at how to plan for any upcoming major expenses in future years, like buying a new home or paying for college. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's yours free of charge by calling 800-393-4001. This guide's chock full of information that may help you understand how to handle any changes you're dealing with now or may deal with down the road. So call right now and get yours today. Again, that's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Leaving assets to your beneficiaries is a critical piece of any estate plan, and Cushing & Dolan has written a new guide that may help you understand how to make the process as simple as possible. As an example, the federal estate tax exemption has increased to $12,920,000. That could lead to a larger inheritance for your family members. But don't celebrate just yet. This guide will offer several strategies about how to make the right decision about distributions at the right time. Call Cushing & Dolan today at 866-848-5699 and get this brand new guide called How to Leave Assets to Your Beneficiaries. Avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. Call 866-848-5699 and get your guide today. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699 or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. Watch the show every day on Twitch TV, Facebook, and our website, FinancialExchangeShow.com. We're breaking down the biggest business stories of the day only on the Financial Exchange Radio Network.
Higher food prices bring bigger profits, but consumers start to resist. That's a piece of the New York Times. And a few different data points that are in here. Just as an example, Pepsi, who makes Quaker Oats and Cheetos, said that it increased prices 16% year over year in the latest quarter. That helped its profit grow 18%, even as volume fell 2%. Now, this is really informative to me about what's going on. The only reason that companies are seeing... Not all companies, but Pepsi, just as an example, the only reason they're seeing sales growth is because
Prices are up.
prices are up.
Yep.
Their volume is down.
Yep.
When they lose the ability to move prices in a similar manner, there's a problem there on the revenue side then.
Yeah. Yeah, you won't be able to grow further with what's going on. Now, the evidence of, hey, consumers starting to resist, I think is a little bit tougher to track down and point to, other than to say, yeah, you're right, fewer consumers bought the Pepsi products because you can see the sales volume down, but other than speaking to people and talking about how they're trading down on certain items and being more disciplined about how they spend on groceries, it's tough to grab a data point to back all this up, but I think it does play into the narrative that I think very much explains this inflationary environment, which is there is a large portion of the American public right now who is living paycheck to paycheck and cannot spend and keep pace with the price increases that we are seeing and are having to trade down. There is another portion of Americans who inflation has not impacted at all and does not care that Doritos has jacked up the price by 10% and is more than willing to keep paying for it.
I think that portion's really tiny.
I do too.
Like, muy pequeño.
But it's more than 1%.
I don't know if it's that much bigger, though.
Yeah.
Okay.
Let's. I'm curious. Where does the 5% income come in here in the United States?
Hang on. Give me just a second. There's a calculator, but I can't remember where it is. Here we go. I got it. Okay. So are we looking on a household basis or on an individual basis? Okay. I got to go to a different calculator. Okay, I got it. So you're looking for the last one that I have is for full year 2021.
Sure.
So if you want to be top 5% in America, 286,000 and above.
Okay.
I would make the argument that that group still cares that their eggs were $8 a thing as opposed to $2 a thing.
I do not disagree. I do not know that they've changed their behavior in reaction to it, though.
Maybe. Okay, I can buy that. I have a find that I scooped up from the Capital One conference call.
Okay.
They reported earnings.
They did.
And this informs a lot of things going on at this point. Capital One, if you're not familiar with their business, I would classify them as a lower half of the income spectrum lender.
Yeah.
via credit cards.
I don't know if it's
unsecured
lower
debt.
half or lower 2/3, but yes, they target a different customer than American Express, for
Right,
example.
they're the anti-Amex. Whatever
Yeah.
Amex is targeting, they're going downstream of that.
Yes.
Here's a quote from their conference call. The 30-plus delinquency rate within the credit card at quarter end, 30-plus meaning are you 30 or more days delinquent? That's what that refers to. It increased 134 basis points from the prior year to 3.66% and is now essentially at its March 2019 level. The charge-off rate has not caught up yet, but based on what we see in our delinquencies, we think the monthly charge-off rate will get back to 2019 levels around the middle of this year. Our credit metrics tend to move a quarter or two ahead of the industry, again, because they're downstream of it from an income perspective. We saw that in the global financial crisis, and we saw it in the pandemic, and we're probably seeing it again here. We are assuming a material worsening of labor markets with the unemployment rate rising today from very low levels to above 5% by the end of 2023. Mm-hmm. So that's what Capital One is telling you based on, and again, if there's any lender that you can say, hey, they are, the lender to the working man,
Capital One's it.
It's Capital One. They're right there. And so this is something that this is, again, another thing that in my mind feeds into this transitory Goldilocks idea, which is, hey, right now, the economy as a whole, it's decelerated a bit, but the argument can be made that this is the soft landing because the inflation data is getting better, but the economy is still growing, so everything looks fine. Capital One, who, again, I think is on the front lines of this, is saying there might be something going on right now, and watch what happens the next 9 months.
Yeah, I think the question for not so much Capital One, but for all of us out here is, will this, assuming we do get what they're talking about, which is an increase in unemployment, will it come from their customers or will it come from the Amex customers? Because so far it's come from the Amex customers.
But the Amex customers are the only reason why the Capital One customers are employed, unfortunately. That sounds callous, but they're the ones buying the stuff from the people that aren't making as much money.
Yeah.
It's unfortunate, but that's how the thing works right now. The other piece that I do find really interesting, just on the back of GDP, and again, I'm gonna land this plane. It'll be a soft landing when I get there. If you look at the last 4 quarters of GDP and what we have seen from inventories and residential fixed investment, they've detracted 1.9% from GDP growth.
Okay.
Because inventories got built up too much and housing fixed investment came way down last year. So even with that, think about what the economy has done. It still has grown the last 3 quarters now. And that's a big headwind from, 2 pretty important areas. So the piece that is interesting to me is as you get through that, that's going to maybe continue another few quarters or whatever it may be. Again, think about all of the improvement that we've seen on the inflation side has been with this going on for the last year.
Yep.
This sucking out of demand on inventories and on housing. And you still only have inflation down in the 4 to 5.5% range. What happens when housing is no longer a drag and when we've burnt through those excess inventories in the retail side of things? So this is the place that I'm going with this.
This is your formula for inflation kicking back into gear.
Yes. You need to get inflation. The reason why the 2% target matters, in my opinion, is not because 2% is some magic number. It's not. It's 2. It's 1 more than 1. 1's the loneliest number, but 2's nothing special in and of itself.
2 is bad as 1 is the loneliest number except for number 1.
Yeah, exactly. Okay? Yeah. Nothing special about 2. The reason that it matters is because if you have a bump in inflation and you're running at 2%, okay, you get up to 4 or 5, and then you come back down. Okay, we had a few months of discomfort and we're fine. If inflation below toes at 4, and then you got an inflation bump and now you're back up at 7, Jay Powell's face gets all like Tony Romo in a hurry, right?
Yeah. What I don't see happening, by the way, is consumers acting as though they think that's going to happen.
No.
Right? You're not seeing people say, "Oh, I'm buying a car now because I don't want it to be another 10% more expensive next year."
No, it's very much more, hey, I want to buy a car. Like it's not.
Yep.
And that's kind of a dangerous place to be, not knowing that might happen. So,
Chuck's spidey senses up. Watch out.
Yeah, I got this thing going on right now. Let's take a quick break here. When we come back, it's Wall Street Watch.
Like us on Facebook and follow us on Twitter @TFE Show. Breaking business news is always first, right here on the Financial Exchange Radio Network.
Hi, it's Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, if someone is going to be experiencing an income change this year, how do they go about planning for that?
Well, I mean, one, you need to know what might cause it. And for a lot of folks heading into retirement, it might be common sense. Hey, I'm starting Social Security. Hey, I am turning required minimum distribution age, or I'm just retiring, and I'm seeing an offset of that work-earned income, and it can affect everything from your taxes to your retirement planning.
Where does someone start as far as how having a plan in place to potentially replace a loss of income?
Yeah, so I mean, I think where you need to start is the buckets approach. So where is my money held? Where are my finances going to come from? Where's my cash flow going to come from? So very common one. I've been saving my entire career. I've been earning an income, and now I am stopping work in, October of 2023, and I need to plan for that. Well, I think the first thing you do is you map out those cash flows. So I have expenses. I'm no longer going to be pulling in an income. Saving isn't necessarily as important anymore, but what is the bucket of money that's going to cover the first 6, 9, 12 months of those expenses, and then map it out further, next 5 years, next 10 years, and go from there.
Folks, the guide is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways you can request it. First, you can call 800-393-4001, or you can go to ArmstrongAdvisory.com. That number again is 800-393-4001, or you can request the guide online at ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Time now for Wall Street Watch, a complete look at what's moving markets so far today, right here on the Financial Exchange Radio Network.
The Financial Exchange is proudly partnered with VA New England. If you or a loved one serve this country, get the health benefits you earned and deserve. Call 844-VA-CARES. That's 844-VA-CARES. Well, markets are in positive territory in the final trading day of April, as investors reacted to this morning's core PCE index, which came in at 4.6% year over year, in line with estimates, in addition to more first quarter earnings streaming in. Right now, the Dow is up by 140 points, just below 0.5%. S&P 500 is up by 21 points, or 0.5%, and the NASDAQ is up by 45 points. Russell 2000 is also up by 16 points, just south of 1%. 10-year Treasury yield is down by 7 basis points at 3.45%, and crude oil is up by nearly 1%, trading at $75.43 a barrel. Meanwhile, Capital One shares are down by about 0.75% after the financial firm missed on first quarter earnings forecast, posting adjusted earnings per share of $2.31, well off of estimates of $3.75 per share. Company executives attributed the big earnings miss to difficulty with lending throughout the period. Elsewhere, Snap shares are tanking 18% after the social media company's first quarter revenue came in below analyst forecasts, where its revenue slumped 6% from a year ago to $989 million. Forecasts had anticipated just north of $1 billion for Snap's revenue. Chuck and Mike will have more on Snap's revenue miss in the second hour of today's show. Another social media forum in Pinterest also reported beating on first quarter earnings and revenue, where sales increased 4.8% year over year, posting revenue of $602.58 million. However, Pinterest issued second quarter guidance that disappointed investors, where the company said revenue growth will be lower than expected due to higher operating expenses, and that stock also tanking by 16%. T-Mobile shares are down by 3.5% after posting mixed first quarter results, beating on adjusted earnings, but missing on revenue and monthly subscriber addition forecasts. I'm Tucker Silva, and that's Wall Street Watch.
Amazon reported earnings after the bell, and shortly after, the stock was up around 10 to 11% in after-hours trading. Then they got on their conference call and gave a little bit of downbeat guidance as it related to their cloud business, and the stock is now down 3.5%, so a 15 percentage point swing from the earnings report to where it stands today.
Yeah, so for anyone that's not familiar with the makeup of Amazon's business, obviously the name brand is so recognizable to everyone because we use it for delivery, TV streaming, music streaming. The big growth engine of their business over the last, what would you call it, decade, half a decade?
Yeah, decade.
Has been through their cloud services that they offer to businesses. And Microsoft has seen a similar thing here, but many businesses have been growing this tremendously over the last few years. It's slowing. You cannot grow really any business at 50%, 20%, or 30% year over year for a decade on end, and that's what you're starting to see across the entire industry here. And the question for Amazon is, can you make that up somewhere else. The one piece where they seem to be making up some of it that I'm very interested in is their advertising segment.
Yeah, what did they do, like $9 billion, I think, for the quarter?
Which was non-existent a few years ago, right? This was minuscule years ago. And now they're starting to really bump that up. I think part of it's probably coming from their video game streaming app. Twitch. But, some of it's just browsing information online and, seeing advertisements paid on the, their streaming services as well as just Amazon.com. And, again, for a business that pretty much didn't exist previously and Google and Facebook dominated, Amazon's starting to pick up some serious dough here.
Yeah, I mean, if there's one thing I take away from this earnings period so far as it relates just to the U.S. economy as a whole, the advertising business is robust right now. Meta knocked it out of the park.
Yep.
Google, solid.
Yeah.
And Amazon knocked it out of the park on the ad business.
Right.
And that, to me, does signal something because
if businesses were so concerned about a recession, they would not be advertising like this. Businesses are still seeing enough of a return on that investment to continue advertising, and that is something that's meaningful. The other thing that seems to be occurring here is the initial scare from Apple's new rules around advertising and data tracking seem to, for most companies at least, seem to have been behind them now. Like Meta has seemed to figure out ways to get around that. Amazon has done so too. Others like Snap, perhaps not so much, but there was an initial scare there, like, hey, are we going to be able to target people in the same way? Will advertisers pay the same rate for ads, given that they can't target them in the same way? By and large, so far, the answer seems to be yes.
Who clicks on web ads?
You when you want to charge a company money.
I do it when I want to charge a company money just because I've already bought that item from them.
I think perhaps more than you might think. Like, Tucker, I'm trying to think. How many web ads did you click on for Traeger grills over the last few years?
I mean, I don't recall clicking on Traeger ads, but I do recall going to their website.
I'll be honest.
Looking up YouTube videos about
I've
Traeger.
done it.
You're an ad clicker.
On occasion,
he's an ad clicker.
Not frequently, but yeah, on occasion, I will see something and be like, "Wow, that is a well-targeted ad. I'm going to go check it out." And I've completed purchases through that.
I don't know if I can do the show anymore knowing that now.
Yeah. There you go.
I mean, that just changed the whole dynamic here.
I mean, once in a while, if it's staring me in the face, I'm like, let me take a look at this again.
I'm pretty sure I bought a nice pair of boots because of a sponsored advertisement that was put forward to me. Pretty sure that was the case.
I just feel like I don't really get delivered relevant ads on a...
Oh, mine are very relevant.
On a normal basis. I mean, I don't know. I'm just trying to pull up, any site that I would normally go to, and I just got an ad for, what are Whimsies? It says it's a wellness variety box. Am I unwell?
If you don't know, you can't afford it, Chuck.
Whimsies, Whimzees. It says Whimsies by Wellness Variety Box.
That sounds like a company that doesn't know how to advertise you, so
pet
it's trying
product.
to...
What kind of pets?
A dental chew. It's a dental treat.
Right? Like, it's just not relevant
Come here,
for
Chuck.
me.
So I'm getting pushed cupcakes from Grubhub. Accurate.
Clean teeth and fresh breath for the pup.
I don't even own a dog.
I know. It's targeted at you.
Can you give cats those? Would you want to?
Can't hurt.
I mean,
it
I
could.
don't think it matters at that point.
Yeah, I don't know. But
here,
I definitely clicked through some advertisements, and clearly it works. Clearly it works, right?
I just got an ad for a Jeep Wrangler.
Okay.
I think you'd look good in a Jeep Wrangler, Chuck.
I would, but I'm not buying one
better
right
than
now.
a Subaru.
I look great in a Subaru. Been wearing one for 15 years now.
Feel the freedom.
Little bit of breaking news here. CNBC reporting that First Republic most likely headed for FDIC receivership. Sources say shares have dropped another 20%. I didn't know there's 20% less. But I guess there's always 20% left.
There's always, yeah. That's kind of my whole shtick. It can always get
down
worse.
to under $5 a share now for First Republic. So,
yeah. And look, this is how things typically play out with bank failures. Is hey, bank gets taken into receivership over the weekend. Take the weekend, reopens Monday in receivership, usually with a new name, and you go from there. So, not entirely surprising. I'm more surprised just that they weren't able to. I'm more surprised they weren't able to find anyone as a potential buyer.
what do you want to buy there? I mean,
well,
yeah, you're
the
getting the nice name brand, but you have to take all of those bonds that are worth so much less than they were initially.
But if you're a bank that's not in trouble, then you grab them. But my guess is, here's the thing. There's a very small niche of banks who are probably the preferred buyer here, because my guess is the FDIC doesn't want to go to one of your systemically important ones, so they're not calling up, JP Morgan or Wells or any of them.
Nope.
There's a handful of other ones that it's probably, okay, we could make this work. But, again...
And they might be in a similar boat.
They might not want to be taking on the risk now, so I do kind of get it. Let's take a quick break. When we come back, we're going to be joined by Peter Earle from the American Institute for Economic Research, talking about business conditions right after this.
Text us at 617-362-1385 with your comments and questions about today's show, and let us know what you think about the stories we are covering. This is the Financial Exchange Radio Network.
April is National Financial Literacy Month, a good time to consider your life's goals and what you need to do to achieve them. Making dreams come true can be a daunting task, especially when it comes to understanding the best ways to manage your money. That's when having a trusted partner like a credit union proves to be of most value, because your financial well-being is at the heart of who we are, people helping people.
Learn more at bettervaluesbetterbanking.com.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier, with no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Chuck Zodda from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the past 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you'd want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions that you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
Proper estate planning is critical and may be the difference between retiring comfortably or living under incredible financial pressure. Cushing & Dolan can help. Call them today at 866-848-5699 and ask for their new guide called Detour Ahead, Estate Planning Blunders to Avoid. Don't put your assets at risk. That's 866-848-5699 or request it online from their website, legalexchangeshow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Armstrong do not endorse each other and are not affiliated. The Financial Exchange is now available on your Alexa smart speaker. Ask to play the Financial Exchange and catch up on anything you might have missed. This is the Financial Exchange Radio Network.
This segment of the Financial Exchange is brought to you in part by the U.S. Virgin Islands Department of Tourism. St. Croix, St. Thomas, and St. John were named the best Caribbean islands to visit for 2023 by the Caribbean Journal. So act now and fall naturally in rhythm with the heartbeat of the islands as you enjoy some of the most pristine beaches in the world along with world-class culinary cuisine. Visit usvi.com right now and book your next vacation today. That's visitusvi.com.
Joining us now is Peter Earle from the American Institute of Economic Research. Every month they put together their business conditions report. Peter, thanks for joining us. Appreciate it.
Thanks for having me.
So I know every month you compile these different data points. Some of them you consider leading indicators. Others are a little bit more trailing and lagging indicators. But let's start with the leading ones. And I want to caveat or preempt all of this with a statement that it seems like there's a lot of volatility in terms of what signals are actually indicating about this economy. But what did you find for the leading indicators for the month of March?
Yeah, that's exactly it, is that there's a lot of churn in these numbers, especially for the last few months. And I mean, I don't know if that's a signal of a top or if a signal of change, but I think that when you look at the actual numbers in the economy, they're a little more clear-cut in some ways than what our indicators are saying. For the leading indicators, we saw new orders for consumer goods and manufacturers, new orders for non-defense goods growing, and we also saw that in GDP somewhat. We saw a very small increase in brokerage accounts. That's another leading indicator, and a tiny change in the U.S. yield spread. But I think what's more important is that we're seeing some declines in some areas. For example, the consumer expectations index. New housing starts, and we already know that housing is and residential investment is plummeting. All that sort of thing. So I think GDP, which we got yesterday morning, of course, U.S. first quarter GDP actually helped to clarify the business conditions monthly more than the other way around.
Peter, were any of the measurements that you guys took for the month of March post Silicon Valley Bank collapse, and if so, or in either case, do you have any data that's indicating, economic conditions or specifically credit conditions tightening post-collapse?
Yeah. So most of the measurements. So we're always looking at the previous month. So the April release, which we had a few days ago, was for March of 2023, and we didn't see many signs of the credit tightening. I think those took a little bit to settle in, but we definitely see them now.
You do.
Yeah, absolutely. I mean, it's almost as if the effects of the collapse of Silicon Valley Bank and Signature Bank had an effect of almost like another Fed tightening, like another 25 basis points. And you can see that a little bit in credit spreads, but you can certainly see it in falling applications or whether it's applications for approvals, falling availability of loans.
Yeah. Peter, what do you make of, and what does the AIER in general make of the yield curve inversion? So, I mean, it honestly hasn't been talked about because it's been inverted for so long now, but you guys have data going back in terms of what that means for its predictability on a recession. What's your takeaway on the inverted yield curve right now and what we should make of it?
So I am one of those people who believes that the yield curve inversions are well, there's a lot to say. I mean, first of all, they are not as predictive as people say, because very frequently there's a lag time, and it could be sometimes up to 2 years after an inversion where you see a slowdown in the economy. And also, we've had at least 2 yield curve inversions that didn't result in a recession. Right now, I mean, so I looked at 3 of these in our recent report, and one of them, which is the favorite of the Federal Reserve, which is the 3-month to 18-month yield curve inversion. That one, historically, at its levels right now, would say a 93% of a chance of a recession in the next 12 months. But the thing is, it's right now the widest it's ever been. So, I mean, you would have been making this call over a year ago if you'd been following it strictly. So they're kind of a flawed indicator. I found 4 others that I think are a little more telling of the current situation.
Peter, any other specific items in the report that you looked at and said, wow, this is a clear indicator of the economy either heating up or slowing down, or inflation going in one direction or another?
Yeah, I mean, inflation's very sticky, but I think the thing that really sort of blew me away yesterday was the explosion in unsold inventories. It's probably the biggest number that I ever remember seeing. It's like $138 billion worth of unsold inventory, and I think that is both a consequence of and also sort of a cause of rapidly declining business confidence, rapidly declining firm manager and optimism, and lack of firm investment, lack of capital investment. Those bode very poorly for the next 12 months.
Peter Earle, he's from the American Institute of Economic Research, joining us today to talk about the business conditions report for the month of March 2023. Peter, thanks so much for joining us. Appreciate it, and talk to you next month.
Thanks for having me.
Folks, the Armstrong Advisory Group has a guide available this month. It's titled 9 Tips to Spring Clean Your Finances. And with this being the last weekday of the month, wanted to let you know that basically you're running up against your last chance to get that guide now, because once May comes around, it's going to be on to the next one. So the guide is titled 9 Tips to Spring Clean Your Finances. It's all about things that you can be looking at to get your financial plan in order before the summer, so you don't have to think about it when you're on the beach or hanging out with the family at a barbecue. How do you request the guide? 2 different ways. Number 1, you can call 800-393-4001. Option 2, you can go to armstrongadvisory.com and you can request it there. Again, this is the last chance to request this guide. Once you get over into May, not going to be available anymore. Again, it's titled 9 Tips to Spring Clean Your Finances, and the 2 ways that you can request it are by calling 800-393-4001 or by going to armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
Intel continues to be mired in a transition that is not really doing so well. It's kind of a poorly timed transition, but you can't really time these things. It's just kind of what happens. But they are going through this transition at the same time the PC sales are, just kind of falling on a daily basis, it seems like. Their PC chip division reported a 38% fall in revenue for the first quarter compared to a year ago. And so their sales slump ended up resulting in a $2.76 billion loss for Q1, second loss in a row, and the biggest loss they have ever faced in a quarter.
Yeah, it speaks exactly what Peter was talking about earlier about inventories and companies just not placing orders on things that they don't necessarily need immediately.
Looks like we are going to take a quick break now, but we still got hour 2 coming up on the Financial Exchange, so make sure you stick around because we're going to be talking about the latest...
Butter.
Talking about butter.
It's going to be an hour of butter next.
No, it's not.
Half hour?
We'll see.
15 minutes of butter, 45 of other stuff on the Financial Exchange next.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org. armstrongadvisory.org.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Chuck Zodda from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the past 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit armstrongadvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you'd want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions that you may have about your portfolio strategy. That's armstrongadvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
This is Tucker Silva of the Financial Exchange, and I'm joined by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. Now, what kind of considerations need to be made when you have a special needs child or a grandchild?
You know, folks, this is so important. So many people have children in this situation, and they oftentimes think that they need to disinherit their child from getting assets, because if they get them and you leave it to the child outright, they're going to lose their governmental benefits that they might be entitled to. Folks, please don't think that way. You do not have to disinherit your special needs child or grandchildren. Inside your trust, you simply leave assets divided equally to the children, right? And have it paid out for the ones who might want to have it paid out for. But if you have a special needs child, you have it held in what is known as a special needs trust. This trust allows the asset to be held in trust for the benefit of that child. It's the trustee of the trust that has the discretion to make payments out for that child. Sole discretion. That way the child doesn't actually own the asset. They can keep their governmental benefits, but the trustee can also use the money to better their lives. So they're better off by enjoying the assets of the trust, and they retain their governmental benefits, all without being disinherited.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they've written a brand new guide called How to Leave Assets for Your Beneficiaries. Call now to get it at 866-848-5699, or you can request it from their website, legalexchangeshow.com. Once again, this guide will help you how to determine the best way to leave assets to your family. 866-848-5699, or you can request it at legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated. This is the Money Matters Radio Network. WBNW 1120 AM and W275 CM FM. Concord, Boston. The Money Matters Radio Network. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Hi, this is Chuck and Mike from the Armstrong Advisory Group, and we have a new guide available this month titled 9 Tips to Spring Clean Your Finances. Mike, how does someone find out if they're taking advantage of all the benefits that their employer is offering them?
You know, it varies a lot company by company. Some companies have just really robust HR and benefit platforms where they walk you through it once a year. Hey, this is what you're eligible for. This is what you can step up to. This is the cost. This is the benefit. And it's I've seen those platforms. They can be really robust and really clear. Other times, it can be pretty complicated, and you do need to actually dig in, speak to somebody either over the phone or in person, and detail out, hey, what am I eligible for? What can I contribute to? And what's it going to do for me?
The big thing, though, is those options may change even from year to year. So even if you were taking advantage of everything last year, there might be new offerings from your employer this year that you just didn't know about yet.
Yeah, so big ones would be insurance coverages that are frequently offered with work. So it could be health insurance, life insurance. They might have different health insurance plans, and picking the right one for you and your family, which your family may change over the years, important to look at. Hey, can I get group life insurance? What are the benefits and drawbacks of something like that? What if I become unable to work for a period of time? Short or long-term disability. All things that sometimes employers provide that are important to review.
Our guide this month is titled 9 Tips to Spring Clean Your Finances, and there are 2 ways you can request it. The first is by calling 800-393-4001. The second option is to go and request it from ArmstrongAdvisory.com. That phone number again is 800-393-4001, or go to ArmstrongAdvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
April is National Financial Literacy Month, a good time to consider your life's goals and what you need to do to achieve them. Making dreams come true can be a daunting task, especially when it comes to understanding the best ways to manage your money. That's when having a trusted partner like a credit union proves to be of most value, because your financial well-being is at the heart of who we are, people helping people.
Learn more at bettervaluesbetterbanking.com.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
The Financial Exchange is produced by Money Matters Radio and is hosted by employees of the Armstrong Advisory Group, a registered investment advisor that provides investment advisory services. All opinions expressed are solely those of the hosts, do not reflect the opinions of Armstrong Advisory or anyone else, and do not guarantee profit. Investments can lose money. This program does not offer any specific financial or investment advice. Please consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong and Money Matters Radio do not compensate each other for referrals and are not affiliated. This is the Financial Exchange with Chuck Zodda and Mike Armstrong. Your exclusive look at business and financial news affecting your day, your city, your world. Stay informed and up to date about economic and market trends. Plus, get breaking business news every day. The Financial Exchange is a proud partner of the Disabled American Veterans Department of Massachusetts. You too can support our great American heroes by visiting financialexchangeshow.com/DAV. And now, it's time for the Financial Exchange with Chuck Zodda and Mike Armstrong.
It's Chuck, Mike, and Tucker with you, and right now we've got the Dow up 82 points, the S&P's up 5, the NASDAQ down 23, so a mixed day to a mixed start to the end of the month. It's the beginning of the end, not the end of the beginning.
Okay.
And so markets are mixed at the moment. We did just get a nice little news dump from the Board of Governors of the Federal Reserve. Michael Barr, the Vice Chair for Supervision, just released the 118-page report on what went wrong with Silicon Valley Bank.
And Chuck had ChatGPT read through it in between the break, and so we're good to report on it.
Honestly, I should plug this in right now, and I bet we'd have a nice little one-page summary by the end of the show at least.
You think it could digest 118 pages by the end of the show?
Honestly, hold on. You talk for a second.
So, obviously, we have not had time to dig through 118 pages of content here in terms of what failed at Silicon Valley Bank, but two of the key takeaways thus far have been that the bank's own supervision made, quote, textbook failures in managing interest rate risk. And then furthermore, Fed regulators really failed to understand and then point out Silicon Valley Bank's problems. And that piece is interesting to me as well, which is it wasn't as though they could...
The message I submitted was too long. Please reload the conversation and submit something shorter.
I told you. So, to me, one of the takeaways, and again, this is very initial, but the Fed regulators seem to be saying that, hey, it wasn't as though we warned the bank persistently enough about this problem ahead of time. There's seemingly plenty of blame to go around here with the Fed itself for not identifying these issues and understanding how it could collapse Silicon Valley as well.
So going through this and just trying to make sense out of it in what they found, one of the big things that they did note is that there were 31 different warnings addressed to Silicon Valley Bank. That is triple the average number of its peers.
Okay.
So the Fed did
point some things out. Yep.
Yes, they did notice that, gee, maybe this wasn't going as well as it should have. And they have four key factors here. The board of directors and management failed to manage their risks. Well, when you don't have a chief risk officer, I could see
Tough
that.
to manage your risks.
Supervisors did not fully appreciate the extent of the vulnerabilities as Silicon Valley Bank grew in size and complexity. So that's pointing a finger at the Fed. When supervisors did identify vulnerabilities, they did not take sufficient steps to ensure Silicon Valley Bank fixed those problems. And
so what's an insufficient step? Like sending a text message to them? Like, hey, you guys should do something about this. I'm very curious as to what sort of warnings actually occurred.
Let me see if I can get there here.
While I'm not a bank manager, were I getting warnings from the Federal Reserve that I'm doing something wrong, I would think that I'd pay a little bit of close attention to them.
So I'm just going to quote from here. Just again, this is all kind of in real time. During the second half of 22 and into 23, as SVBFG's liquidity stream steadily weakened, unrealized losses accumulated on its securities portfolios and its performance outlook deteriorated. Supervisors continued to accumulate evidence of widespread weaknesses and delayed escalating supervisory action. So it really sounds like, hey, you saw this, you being the San Francisco Fed, you knew it was a problem, but you didn't want to do anything.
Quite honestly.
For example, It took more than 7 months to develop an informal enforcement action known as a Memorandum of Understanding to address the underlying risks related to oversight by their various boards of directors and senior management. 7 months, and Silicon Valley Bank failed before the Memorandum of Understanding was delivered.
Quite honestly, I'm wondering, had a Memorandum of Understanding been drafted and delivered by end of 2022, could anything actually have been done to turn this around other than the bank collapsing earlier?
Don't know. I mean,
it's tough to prove a negative out here, but by 2022, a lot of the damage had been done, especially by Q4.
While supervisors did issue supervisory findings, the delay in a rating downgrade meant that SVB effectively continued to operate below supervisory expectations for more than a year, despite its growing size and complexity. Overall, the supervisory approach at SVB, and when they say supervisory, they're referring to the Federal Reserve, not to
the bank.
Not to the bank, was too deliberative and focused on the continued accumulation of supporting evidence in a consensus-driven environment. Furthermore, the rating assigned as a smaller firm set the default view of SVB as a well-managed firm when the new supervisory team was assigned in 2021 after SVB's rapid growth. This makes downgrades more difficult in practice.
Big problem.
So
you're a bank regulator that takes 7 months to warn a bank that they're in trouble.
What it sounds like here, and I'm not excusing the Fed or anything along those lines, but what it sounds like here is the San Francisco Fed was operating under a framework that allowed it to move at a certain pace, whereas the broader Federal Reserve, the open market committee, was raising interest rates at a pace that necessitated a more rapid review of the liquidity risks in the banking sector. If this were a normal Fed hiking cycle, and let's say a 5% rise in interest rates took 4 years to play out instead of 9 months, it could be something where, okay, we identified this, and this was no problem because it took 4 years to build up, and we fixed it before then. Because the Fed had to raise rates so quickly, also partially because they were so far behind the 8 ball with how high inflation was and completely misreading the situation there. So, some blame to the broader Fed also. The internal policies and procedures at the San Francisco Fed were insufficient, and they moved too slowly.
Yeah. So more to come on this. We'll have the weekend to go through it. But first, I don't think it changes our overall opinion. Most of the blame goes to Silicon Valley Bank for acting completely inappropriately and not managing their own risk.
82.5%.
There's a lot of blame here at the Fed for having inadequate ways to evaluate and warn banks about their behavior.
I still put the Fed third.
Who do you put second?
The depositors have tried to pull almost 75% of the funds out in a day, despite being venture capitalists with the word capital in their name, and when asked to contribute capital into a bank that had supported their endeavors for the entire career, they chose to pull their money out instead.
Oh.
I kind of blame them. What they did was rational in the sense of, hey, if threatened because you have this huge uninsured deposit at a bank, yes, you should address the uninsured deposit problem. But it also could have been fixed if they simply said, oh, you're asking for $1.5 billion? Great, we've got all these uninsured deposits here. Let's contribute to that $1.5 billion capital raise so that you don't go out of business.
Yeah. Instead, they said everybody pull their money.
Like, they could have done both.
So they caused the failure, but they didn't contribute to all the problems at the beginning.
You know why no other banks aside from First Republic's soon-to-be failed and Signature have failed?
Because nobody ran the bank.
Because no one else ran on the banks.
Yeah. But wouldn't they have if the Fed and Treasury and FDIC didn't take all the steps that they did?
If you want to say that the Fed gets equal blame there, I'm fine with that. But you had all these venture capitalists who were, oh, we're so good at our jobs. Look at what we do. We're venture capitalists. We venture into capital and blah. And instead, what happened? Oh, no, we got to pull the money out. Run away.
Yeah, I mean, here's where the venture capitalists, to me, have some of the blame. Don't encourage or require all of your depositors, all of your invested companies to use one single bank.
And as part of that, then the bank also was, oh, you've got this here. Well, we're going to make all of your loans here, so you have to, keep all your business here as a requirement.
That is the part that's on you, venture capital firms, is you encouraged and required all of your clients to put your money at Silicon Valley Bank and did not take into consideration the risks out of a bank where 97% of the deposits are uninsured.
And I'll go further there. Your venture capitalists are supposed to be savvy investors. We're not for the mere plebs out in the workforce. No, we're savvy. And you didn't even have any of these accounts set up with sweep programs to make sure that the money was not sitting uninsured in a single bank during this?
Earning no interest, by the way.
Like, what are you doing?
Okay, I've now got myself on board with blaming the venture capitalists for some of the failure at Silicon Valley Bank. Thanks for getting me there, Chuck.
Welcome. It's a good day.
I always like to blame venture capitalists. So
they're my fifth favorite group to blame after MBAs, FIFA, the IOC,
MBTA,
and the MBTA. It's usually one of those groups that's responsible. Let's take a quick break and...
There's that alphabet soup of blame.
Well, hey, I'm reading through this report here. What the heck is EGRRCPA? What's Agrippa?
You don't know my pal Agrippa?
What
Went to college with Agrippa.
What is that? Okay, clearly I'm not that neck deep in banking regulation because I don't know what that is.
Yeah, look that up.
I don't even know how to type that into Google.
We'll get back to you.
Let's take a quick break. Trivia's next.
If you missed any of today's show, catch up whenever you want on our YouTube page. Find daily show segments and full shows. Just go to youtube.com and search for The Financial Exchange. This is your home for breaking business and financial news. This is the Financial Exchange Radio Network.
Financial planning never sleeps, so as spring comes into full swing, now's a great time to spring clean your finances. The new guide from the Armstrong Advisory Group may help you do just that. This is Mike Armstrong, and our guide talks about planning for a one-time expense this year, like a new car or a long family vacation, and how that might affect your finances. We'll also look at how to plan for any upcoming major expenses in future years, like buying a new home or paying for college. Our new guide is called 9 Tips to Spring Clean Your Finances, and it's yours free of charge by calling 800-393-4001. This guide's chock full of information that may help you understand how to handle any changes you're dealing with now or may deal with down the road. So call right now and get yours today. Again, that's 800-393-4001, or you can request the guide online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
April is National Financial Literacy Month, a good time to consider your life's goals and what you need to do to achieve them. Making dreams come true can be a daunting task, especially when it comes to understanding the best ways to manage your money. That's when having a trusted partner like a credit union proves to be of most value, because your financial well-being is at the heart of who we are, people, helping people.
Learn more at bettervaluesbetterbanking.com.
Cushing & Dolan's new guide called How to Leave Assets to Your Beneficiaries may help you with your estate planning. It offers several strategies about how to make the right decision about distributions at the right time. Call 866-848-5699 and get yours today. That's 866-848-5699. Or request it online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Chuck Zodda from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the past 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you'd want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions that you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. For your chance to win our daily trivia contest, text us at 617-362-1385 and use keyword Encore. Complete rules are available at financialexchangeshow.com. This is the Financial Exchange Radio Network.
All right, time for trivia here on the Financial Exchange, and it's brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa. Well, on this day In 2019, Avengers Endgame became the fastest grossing movie of all time. Endgame took only 5 days after release to hit that mark. Over the previous 10 years, many movies have surpassed the $1 billion mark at the box office, but the first time a movie passed the $1 billion mark came in 1998. Which movie was the first to gross over $1 billion? That's our trivia question today. Once again, which movie was the first to gross over $1 billion? I think that's pretty easy. So we'll go with the 8th person today to text us at 617-362-1385 with the correct answer, and you win a Financial Exchange Show t-shirt and be registered to win a $100 gift card to Encore Boston Harbor. Be sure to include the keyword Encore in your text, and we'll give away that Encore gift card in the next segment. 617-362-1385, and the 8th correct response will be our winner. See complete contest rules at financialexchangeshow.com.
Okay.
Go ahead.
China ratchets up pressure on foreign companies. It's a headline from the Wall Street Journal, and I'll just read a paragraph here. In recent weeks, Chinese authorities have questioned staff at consulting firm Bain & Company's Shanghai office in a surprise visit, launched a cybersecurity review of imports from chipmaker Micron Technology, detained an employee of Japanese drug maker Astellas Pharma, and raided the Beijing office of U.S. due diligence company Mintz Group. What do you make of this, Mike?
More of the same, but let's give a little bit more context here. So over the last few years, there's been a big fight between the U.S. Regulators and China in terms of books and records requirements for Chinese companies that choose to list on U.S. exchanges. They got pretty close to booting a bunch of them off of there, and then the Chinese government acquiesced and started allowing these independent auditors into those. Furthermore, China's been on this reopening campaign saying, hey, we are encouraging and opening up for business again. And then this happens. And it seems to be directly contradictory to those two actions that I just mentioned, and perhaps is just another way of China confronting the West in different ways. Or I guess not just the West. I mean, the West and its allies like Japan.
Here's something that, and I'm going to take this in a slightly different direction. One of the things that I always find interesting when people talk about, in the last couple of years in particular, who's going to want to, do business using the U.S. dollar after, they sanction these companies, and look at all these, countries that are trying to move away from the dollar because of sanctions and so on and so forth.
Russia, the United States cut off Russian access to about $300 billion.
And the answer is not going to be the Chinese yuan. Because
based on this.
Because if you think that dealing with what the U.S. government wants you to do as far as, reporting where your money is and what you do and so on and so forth, the Chinese government is 10 times more intrusive and more controlling about what you can.
So long as you don't piss them off.
If you, as an example, were to say, gee, I don't think that the United States should have, territories in Guam, as an example. Is the U.S. government going to confiscate your assets?
No.
If you and China were going to say, I don't think that China has a legitimate claim to Taiwan,
or
Chinese government is going to take your assets and make sure you don't ever earn enough to accumulate new assets again.
Yeah.
As an example,
on the other
of this,
hand,
see Jack Ma.
Yeah. On the other hand, if you never recognize Taiwan, they will give you manufacturing priority in the country. They will give you special access to all sorts of markets. And so I don't know. Like we talk about this logically, how I would react to it. But were I a developing nation who was desperate for cash and investment, would you be willing to give up that freedom of opinion and speech when it comes to the Chinese government?
They can't. It's because the very foundation of the Chinese government is the idea that the party provides for you, the party is supreme and cannot be questioned. Like, that is the whole premise.
Right. I'm talking about other countries that might want to do business there.
Which one? Like,
if I am
the U.S. or
Brazil, and I am desperate for development, and am I willing to say to I guess, my government, hey, do not speak badly about China. In exchange, we're going to get access to a whole new market.
Well, you are until they come in and take all your stuff when you can't repay the debt that they lend you and stuff like that.
Yeah. But,
So,
again, I wouldn't react that way were I the leader of Brazil, but other leaders may.
no, but if you were the leader of a company,
Yeah. Would you go there?
that's where you say, gee, yeah, there's upside because I got this market I could sell into or this cheap labor. But man, what kind of line do I have to toe now as opposed to what it previously was?
The answer for the last 50 years has been resoundingly yes, I'll go do that.
It feels like we're getting closer to an inflection point, doesn't it?
I mean,
Apple's the canary in the coal mine.
yeah, when you detain Japanese drug maker, employees of Japanese drug maker, and just start raiding offices, yeah, it seems like you would get there, but
Apple has made itself a 2-point-whatever trillion dollar company by using cheap manufacturing from China to do so.
and they are intentionally telling investors that they're trying to
move away from that.
Yeah.
I mean, isn't that the canary in the coal? Like,
Should be.
Tim Cook's entire career was built on building great relations with China so they could get the labor and product they needed when they needed it.
Yeah. By the way, if you think that you have a company that is capable of measuring risk in China right now, this should be a warning to you. Like Mintz Group, like Mintz Levin, like this is a big global asset manager with risk management trying to figure out what's going on in these different countries, and they are raiding their offices right now.
It's not great.
Good luck.
It's not great. It's not. Let's take a quick break here. Markets remain mixed at the moment. We're going to be back talking Snap.
This is Tucker Silva of the Financial Exchange, and I'm joined by estate planning attorney Todd Lutzke from the law firm of Cushing & Dolan with your Financial Exchange quick tip of the day. And today, we're talking about your brand new guide, Todd, how to leave assets to your beneficiaries. How can you ensure that your kids' inheritance can be protected from future divorces?
Well, that's a great question, and many people want that, right? You never know where your assets are going to end up if your children get divorced after you die, right? That's really the key. And so a trust can do that for you, folks. When you have assets in a trust, you can design it any way you want. Have it set up where it says equally to the kids and then have it held in trust. You can allow the kids to be trustees of the trust, but you allow them to manage and invest the buckets of money, which they can't take from each other and from each other's bucket. But in order to get money out for themselves or their own kids, they would need another trustee in their sole discretion allow for that. And they can remove and replace this other trustee anytime they want. And it's that sole discretion with all this control that prevents them from actually owning it. And so when the divorce comes and they want the money, for the other side wants the money, the other side says, here, give me half the money that's in the trust. They say, ask the other independent trustee. Sole discretion, folks. You see where it goes. If they don't own it, it's not a marital asset. It's not subject to the divorce. The trust owns it.
The estate planning experts at Cushing & Dolan have been helping families like yours for more than 30 years, and they have written a brand new guide called How to Leave Assets to Your Beneficiaries. Call now for your free copy of this comprehensive guide that will help you determine the best way to leave assets to your family. 866-848-5699, or you can request it at LegalExchangeShow.com. Once again, 866-848-5699, or you can get it at LegalExchangeShow.com.
The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com.
Hi, this is Chuck Zodda from the Armstrong Advisory Group. Spring is here, your taxes are coming due, and if you're considering some changes to your financial structure, our new monthly guide may help. It's called 9 Tips to Spring Clean Your Finances, where we outline a host of different issues that may affect you going forward, like evaluating any income changes for 2023. If you're retired or getting close to retiring, it's important to understand how a change in income can affect your long-term planning. It's also a good time to review or update your estate plan, because as you get older, circumstances may change, so you'll want to take a look at your plan to ensure that your assets are protected. Call right now at 800-393-4001 and request your copy of our new free guide, 9 Tips to Spring Clean Your Finances. That's 800-393-4001 or request it online at armstrongadvisory.com.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services. Miss any of the show? You can catch up at your convenience by visiting financialexchangeshow.com and clicking the on-demand icon, where you'll find all of our interviews and full shows. This is your home for the latest business and financial news in New England and around the country. This is the Financial Exchange Radio Network.
All right, let's pay off our trivia question today, which was, which movie was the first to gross over $1 billion? Well, that would, of course, be Titanic. On March 1st, 1998, Titanic became the first film to earn more than $1 billion worldwide, and on the weekend of April 13th to the 15th of 2012, a century after the original vessel's foundering, Titanic became the second film to cross the $2 billion threshold during its 3D re-release, which I didn't really realize it was released in 3D. I don't know why you'd want to go see that. Winner of the shirt, or the Financial Exchange shirt, was Barry from East Sandwich. Congrats to Barry. And then the winner of the $100 Encore Boston Harbor gift card was Sam from Melrose. So congrats to both winners there. And trivia is brought to you by Encore Boston Harbor. Visit EncoreBostonHarbor.com and see for yourself why Encore is a Forbes 5-star award winner for both hotel and spa.
Mike, you want to talk a little bit about Snap?
Yeah, does anybody in this room use Snap? I was playing with it yesterday because they had cool filters for my kids to laugh at, but I don't
check
know
in
the last time I've sent a Snap.
I check in like once a week on Snap, if that.
I don't know what the kids are doing these days. I know they're TikToking. I don't know if they're still snapping. But Snap generated a little bit less than $1 billion in revenue in the first quarter, which was a 7% drop from the year-ago figure. And my takeaway here seems to be going in opposite directions of Meta.
It is not a platform that has enough reach to maintain. If you're an advertiser, it's clear that you are not going to, if you're asked to reduce your budget,
Snap's the place to go first.
That's the place they're going first.
Yeah.
It's not Google.
Yep.
It's not Facebook. You might even be adding to your Amazon budget. But Snap, you're saying...
TikTok, too.
TikTok, we don't know.
Right, yeah,
you'd assume that they're adding there, yeah. But we don't know. I've never actually been on TikTok, so...
Me either. Yeah, this is... and It also seems to me that they are having a tougher time navigating the new Apple rules than Facebook is. Facebook's, speaking to their generative AI is doing a better job of targeting advertisements. Snap is, pointed to some things that they considered one-time items that are hitting their revenues, but I just have a tough time believing it.
Yeah, I don't really know what to say as far as...
So their quote was that Snap said demand for ads in the most recent quarter was disrupted by changes it made to its system to drive more click-through conversions. They're disruptive in the short term. They're optimistic that it's going to lead to future growth. Need a little more than optimism. Need proof.
What am I going to get from subscribing to an AI chatbot on Snap?
It's going to guess what filter you want to use. Yeah.
Like, what's there? And obviously, they've had no success with any of the hardware stuff they've tried to roll out.
Honestly, the $3.99 thing that you just discussed is some way for them to say that we're using AI in their earnings call. Nobody's going to subscribe to it.
Further proof that AI, in my opinion... Here's why I think it's the new blockchain, but I think it's both underestimated and overestimated.
So it's just estimated.
No. I think companies are getting too much excitement today in terms of, they're doing AI and that's going to generate like a ton of revenue, which I think is the overestimation. I think the underestimation is we don't realize how much AI is actually going to reshape how these companies even look 5 years from now.
Right.
That's what I got.
Beneficiary planning and asset protection go together like PB&J, but saying you're leaving everything to your kids isn't as simple as it sounds, especially if they have problems of their own. If you're retired or nearing retirement, it's time to consider the best way to keep your assets in your family while avoiding significant financial consequences down the road. Call Cushing & Dolan, the experts in elder law. They've got a brand new guide out right now, How to Leave Assets to Your Beneficiaries. And by the way, it's the last day of the month, technically, as May is on Monday. If you want your assets to transition smoothly within your family, there are important steps that you should take before simply putting names on the dotted line. Call 866-848-5699 and get your free guide today. It's the last day of the month, so that guide is going to go back in the vault. So this is your chance to get the guide. You'll learn which paths are the safest when it comes to protecting yourself and your children. That number again, 866-848-5699, or you can request it from their website, legalexchangeshow.com.
The proceeding was paid for, and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and/or Armstrong Advisory may contact you offering legal or investment services. Cushing and Armstrong do not endorse each other and are not affiliated.
Exxon and Chevron both reporting earnings and collectively posting $18 billion in first quarter profits. So even as gas prices have come down over the last year, these companies still reporting good profits, just not the record-breaking ones they were putting up last year.
Yeah, when you don't spend, pretty easy to make a whole bunch of profit, and that's what investors have been asking them to do is don't expand right now, don't expand your capacity, don't go drill more wells. We want you to just rake in profit. You suspect that if oil hangs out here for long enough, that investor sentiment starts to shift a little bit because, hey, if oil profits are this high and they could be growing, then you expect that they would change a little bit. But so far, I don't think you've seen really any indication in terms of activist investors jumping in there and saying, hey, Exxon, hey, Chevron, go build a new offshore well and go start looking for new oil.
I did just take note of one paragraph in here. I think it was you who turned me onto this the first time I read about it. Exxon announced Thursday it's moving ahead with its fifth project off the shores of Guyana, where the company is tapping vast new reserves of oil. It's a $12.7 billion development that'll pump 250,000 barrels of oil a day when it starts in 2026. The economy of Guyana has basically exploded.
Fastest growing economy in the world.
Because they discovered just a boatload of oil, or lots of boatloads of oil, right offshore, and there's all kinds of energy money that is flowing in to develop it right now. So the math on this is just really interesting to me. $12.7 billion development, 250,000 barrels a day. Let's assume oil is going to be 80 a barrel, just as a benchmark.
Yep.
Maybe it's higher, maybe it's lower. I don't know. That's $20 million a day that Exxon then recoups are $7.3 billion a year in revenue that they recoup from a $12.7 billion development. Now, they have operating costs, obviously, and things like that.
Not $80 a barrel worth of.
No. So just to give you an idea of how these companies, again, the dollars add up when you say, okay, $250,000 a day over and over and over.
Yeah. Some serious dough.
It's a big chunk right there. So, and remember, the world uses, 115, 120 million barrels a day these days, somewhere like that. So, I mean, that's like 0.25% of world oil production coming from one, not necessarily
one well in one country.
I don't know if it's one well. I think that you can get more than one
company in one country.
Yes, one development.
Yeah.
Let's take a quick break here. When we come back, we're going to be joined by Paul LaMonica, and we're talking Chipotle after this.
Text us 617-362-1385 with your comments and questions about today's show. This is the Financial Exchange Radio Network. The United States Virgin Islands, St. Croix, St. Thomas, and St. John were recently voted a top Caribbean destination by Travel and Leisure magazine and several other top media organizations, as well as the best Caribbean islands to visit in 2023 by the Caribbean Journal. Spring has arrived in New England, but it's still a perfect time to head to America's Caribbean paradise. When you arrive, you'll enjoy some of the most pristine beaches in the world, incredible scuba diving and snorkeling, and world-class culinary offerings. Book your trip today and fall naturally in rhythm with the heartbeat of the islands, where the sun is strong, the clouds are few, and the weather is perfect every day. Travel from New England could not be easier. With no passport required, no money to exchange, and no travel restrictions to enter. Go to visitusvi.com and learn more about America's Caribbean paradise and book a trip today. That's visitusvi.com. Leaving assets to your beneficiaries is a critical piece of any estate plan, and Cushing & Dolan has written a new guide that may help you understand how to make the process as simple as possible. As an example, the federal estate tax exemption has increased to $12,920,000. That could lead to a larger inheritance for your family members. But don't celebrate just yet. This guide will offer several strategies about how to make the right decision about distributions at the right time. Call Cushing & Dolan today at 866-848-5699 and get this brand new guide called How to Leave Assets to Your Beneficiaries. Avoid unnecessary mistakes that can cost you dearly in the long run and ensure that your assets are protected for generations to come. Call 866-848-5699 and get your guide today. That number again is 866-848-5699. Or you can request the guide online by visiting LegalExchangeShow.com. The proceeding was paid for and the views expressed are solely those of Cushing & Dolan. Cushing & Dolan and or Armstrong Advisory may contact you offering legal or investment services. Cushing & Dolan and Armstrong Advisory do not endorse each other and are not affiliated.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we may be able to help. Visit ArmstrongAdvisory.com today and sign up for a free, no-obligation consultation. Simply click on the Get Started button on our homepage, and you can pick the date and time you want for your initial meeting. If you have questions about the right time to retire, let us help you build an action plan designed to meet your financial needs and address questions you may have about your portfolio strategy. That's ArmstrongAdvisory.com. Click the Get Started button and request your free consultation today.
The proceeding was paid for by Armstrong Advisory Group, a registered investment advisor. Nothing in the ad or in any Armstrong guide is specific financial, legal, or tax advice. Consult your own financial, tax, and estate planning advisors before making any investment decisions. Armstrong may contact you to offer investment advisory services.
My name is Dottie. This is my VA story. My father served in World War II. He was my hero. As he got older, he needed more help. VA New England Healthcare was there for him and our family every step of the way. VA New England Healthcare offers unlimited healthcare options. The best part? It never cost our family a single penny. As a veteran, my father deserved the best, and so does a veteran in your life. My name is Dottie, and I choose VA.
For more information, call 1-844-VA-CARES or visit vacares.us.
For 40 years, Cancer Support Community has been a relentless ally for anyone impacted by cancer, with free services provided online and in person, with their newest location in Massachusetts. Connect with Cancer Support Community Massachusetts for free emotional support, educational resources, patient navigation, financial counseling, and more. 617-797-3391. CancerSupportMass.org. CancerSupportMass.org.
Missed one of our shows? Catch up anytime by asking your Alexa smart speaker to play the Financial Exchange. This is the Financial Exchange Radio Network.
Ladies and gentlemen, the weekend.
April is National Financial Literacy Month. It's a good time to consider your life's goals and what you need to do to achieve them, especially when it comes to understanding the best ways to manage your money. Having a trusted partner like a credit union can prove to be extremely valuable because your financial well-being is at the heart of every credit union. Learn more at betterbanking.com.
We're joined now by Paul LaMonica, here to talk a little bit about Chipotle. Paul, how are you doing today?
I'm good, thanks. How are you guys doing?
Doing well. Chipotle apparently is raising prices, and unlike Tucker and I, who say, hey, maybe it's gotten a little bit too expensive.
I went yesterday, but yeah.
Oh, you did?
Oh, yeah, I was
so you're
starving.
just complaining, and then you go anyways.
Accurate.
Okay. Paul, is that what everyone else is doing?
It does seem that way. I mean, Chipotle said in its most recent earnings call that, while avocado prices have cooled a little bit, they are still seeing, inflation in a lot of other areas: dairy, tortillas, salsa, beans, rice, just about everything you would need to make a burrito. And yet, despite that, the company said on its earnings call, and remember, sales were great, they said that the middle class and affluent customers were definitely still spending heavily, but that lower income customers were also returning Chipotle and spending a lot more as well. So I think that people are just, definitely happy with the food and willing to pay these higher prices. And that's great news for Chipotle investors. The stock's at an all-time high now.
Paul, just how good of a job has Brian Nichol done there since he came on board? Because he came on during a time where the company had some real questions, and it seems like every move they've made has just worked out fantastically since he started there.
Yeah, he has done a phenomenal job, given that he came at a time when there were concerns about, legitimate worries about the E. coli outbreak and what that was going to mean for the company, back in 2015 and 2016. And Nichol has definitely turned Chipotle around. I think most people have probably forgotten that incident. You don't hear too many people complaining or worrying about going to Chipotle and getting sick. And, the immediate rebound, in the few years after that problem, that was the reason why when I was, back at CNN Business, we named Brian Nichol the CEO of the year for 2018. And clearly he's continuing to do a great job because stock's at a record high. So it's obviously done even better since 2018 when we gave him praise back then.
What's Chipotle doing these days in terms of expansion for new locations, or is it mostly same-store sales growth that is driving things for them?
Yeah, it's really the same-store sales growth that is phenomenal. I mean, to have double-digit same-store sales growth at a company this large is just really a testament to the fact that consumers really love the food. So you have your amazing same-store sales growth. Obviously, inflation and the higher prices are adding into that. But I think what a lot of people give Chipotle credit for now is that they have really just turned this into a mobile-first restaurant, fast casual chain. So when you look at the fact that nearly 40% of their total food and beverage revenue is coming from digital sales, I mean, I know just from firsthand when my wife and I go to pick up Chipotle for us and the kids, there are more people picking up the bags that are being put out because of those mobile orders, including ours, than people just like popping in out of the blue and placing an order in the now seemingly antiquated way of showing up on an impulse and talking to someone about what you want. You're just doing it on the phone. You just pick up the bag and you go.
Paul, are they still poking around on trying different brand concepts with other types of food, or is that not something that they've done recently?
No, I am aware that they have still been looking at other restaurant concepts, but I think that really this is a company that, in the same way that McDonald's is McDonald's, I mean, it's not going to, I think, have these aspirations of turning themselves into a conglomerate that has multi-brands like a restaurant brands with Burger King and Popeyes and Tim Hortons, or Yum brands with KFC, Pizza Hut, and Taco Bell. I mean, Chipotle may have other smaller concepts, but I don't get the sense that this company is looking to turn itself into a multi-brand, fast casual giant. And why do you need to, as long as Chipotle has the success and popularity that it's facing that's having right now?
Very good. Paul, if anyone wants to read what you're putting out these days, where do they go to find it?
They can go to paulrlamonica.substack.com. I've set up Substack just for free right now, just to kind of get some thoughts out there about the markets and economy, and we'll see how it goes. I may make it a subscription option at some point down the road, but for now it is free. So I'd be happy to have more readers for that. I'm posting like 1 or 2 times a day. So
fantastic, Paul. Appreciate you joining us. Have a great weekend.
Thank you very much. Appreciate it, guys.
That is Paul LaMonica talking about Chipotle. That whole concept at the end got me thinking about the idea of just a mass tie-up of all those fast casual places under one umbrella, where you've got Panera, Chipotle, and Five Guys all in one.
It's called a food court.
I know, but Tucker, here's what I'm getting at. All of those places right now do really strong mobile ordering things. Imagine if you could just imagine if you could have those in one place.
One app to rule them all.
And you could get, you're picking up, lunch for the office. Great. You can get half the people burgers, a third of them sandwiches, and 2 people burritos.
Just mobile only.
Yeah.
I'm not saying that can't be successful, but I look at the other companies that try bringing a bunch of restaurant brands under one brand.
Like restaurant brands?
Like restaurant brands. The owner of Burger King would be another one that I think of. And I don't know. I guess restaurant brands, I can't really point to a whole lot that I think they're doing wrong. On the case of the Burger King owner, I can point to quite a bit that they seem to be doing wrong. Yeah. So I'm not sure it's necessarily the winning formula.
Can we talk about butter?
Let's talk about butter.
Finally.
Paying this off, waiting to pay this off.
Do you guys keep your butter in the fridge?
The majority of it I do.
I do both.
I
keep
what?
a stick of salted butter on the counter at all times.
It's got a nice little, ceramic dish, a little cover on top,
Although,
and then
I'll
we
be
got
quite
butter
honest,
in the fridge.
I keep my house so cold that keeping a stick of salted butter on the counter in the winter months does not actually make it very soft.
It's basically still in the fridge.
Yeah.
Yeah. I'm a big proponent of the both as well. It's, hey, you want something you can easily spread on some...
Why are we so terrified of needing to refrigerate everything in this country?
I don't know.
It's the poultry police, man.
Like, I lived in part of Brazil for 3 months while studying there years and years ago, and very little dairy was kept in the fridge. I had to get used to drinking warm milk because they had...
what?
Yeah.
Okay,
milk was not kept in their fridge.
That's weird.
And it did not spoil.
I wouldn't trust that.
I
would not trust.
He's still here.
Yeah, I am alive, and I never tasted sour milk. Now, granted,
maybe it wasn't real milk.
They were not going through gallons of milk at a time. It was a much smaller, smaller serving size. But
so it wasn't kept for a week. Is what you're saying?
It was not kept for a week. It was kept for a couple days.
Well, that's why.
Again, but
Americans buy food differently.
We do. Yeah.
You could argue that in some ways it's worse because the premium in the U.S. is on shelf stability as opposed to freshness,
yeah,
and stuff that's actually good for you,
yeah.
But yeah, I mean,
we are terrified of things like spoiling and expiration dates.
Expiration dates, I'm a firm believer in. They don't matter.
That needs to change.
I agree, but everybody else is terrified of them.
Smell it, and if it smells fine, eat it.
Yeah.
Is kind of my go-to. My wife gives me a lot of grief because of all the stuff that I eat that's like 3 months past its expiration date. I'm like, smells fine, tastes fine, let's go.
Yeah. I mean, this Best Buy or, don't use after. Just be more clear with the expirations, please.
I'm a big believer that you can eat open salsa for up to 6 months.
Stocks are up. First Republic is down and halted.
We're done for the day and the week. I hope everyone has a great weekend, and we are back here next week to kick off May with a busy, busy week.
Thank you. Have a great day.
If you could retire early and know that you'd be able to live comfortably, wouldn't you do it? Hi, this is Mike Armstrong from the Armstrong Advisory Group. According to the U.S. Bureau of Labor Statistics, nearly 50 million Americans quit their jobs in the last 2 years. The COVID-19 pandemic continues to create significant challenges for the current workplace, and if you're thinking about retiring, we